Good morning, everyone, and welcome to our Saturday webinar this 14th of September. And welcome to our session on health insurance today. And we shall take you through important aspects that one should keep in mind while looking for a health insurance. We shall wait for a couple of minutes for our viewers to join in. We also welcome those who are joining us on our YouTube channel live and hope the session would throw light on a lot of things that one assumes are taken care of by health insurance, but a lot between the lines that needs to be looked into. Good morning once again, and we shall now start with our session today on understanding a lot about health insurance. Welcome to our Saturday webinar on the 14th of September, and we shall throw light on a little bit of in details with respect to health insurance. We all know health insurance is important, but there are a lot of hidden facts that don't come out till one actually goes down at an emergency situation. And this is what we would like to avoid for all our clients. And hence this session to educate you about the finer details that one needs to look into while considering health insurance. So let's start with our basic details. It's a shocking reality that we get faced with. And this is something that one of our influencers in the market has shared with us. This is something that Nitin Kamath has recently shared. He is someone that's known to many people in the financial world, as well as regular people who follow various social media. He was recently hospitalized for a personal health condition, and his opinion is most Indians are just one hospitalization away from bankruptcy. This is what Nitin Kamath of Zerodha is warning all of us. What does this really mean? It means that there is a fair amount of financial burden of medical expenses in India. If you were to get into a situation where you get into medical expenses of a significant nature, it can actually cause a huge financial burden on you if you do not have the backup. The out-of-pocket health expenditure in the country, in India, of course, was the highest in the world in 2021. And a large percentage of that was because Indians lack health insurance or having considerable health insurance plan. This situation can actually lead to financial hardships for the family who have to bear the medical expenses out of their own, which means it comes out from your savings. This is a situation where one would want to take care of your loved ones, so there will be no compromise. You would want to do what you have to do, but it comes at a heavy price. So what is the implications of not being covered by adequate and, more importantly, comprehensive insurance for health? If you lack that kind of adequate health insurance, it could have a catastrophic financial losses, could lead to wiping out your life's entire savings. Because one is never sure of what kind of medical situations can come up, whether they would be a short-term medical condition or a long-drawn medical treatment. Not having adequate financial backing for your medical expenses can actually drain out your life savings. So what does one really need to do? What you need is to protect yourself and your loved ones with an adequate and complete comprehensive health insurance. So what does that mean? There are 3 Ds that one needs to look into in this. There's death, disease, and disability. These are things we discount saying, this won't happen to me. Mujhe kuch nahi hoga. That's the typical attitude that we have. Somebody else has gone through this, but it won't happen to me. That's the first thing we need to be careful about. So, health insurance should actually provide for a financial protection against anything of this kind so that you are protected against unexpected medical expenses. It should be a comprehensive policy that can cover a wide range of medical treatments and procedures and expenses associated with them. What it would do is it can help you avoid dipping into your savings or taking loans to cover those expenses. It may not help in avoiding health situations, but it will surely help you sail through those situations without having to think about the financial implications of that. So what is a good policy to have? So we have some key points over here of a feature-rich policy, which is what you need to look into at the finer print while considering health insurance. It should first and foremost be a cashless hospitalization. It should not be that you have a health insurance and then you go to pay at the hospital and then wait for the money to come back to you. It has to be cashless, the hospital. It has to have a vast network of hospitals where this direct settlement will happen for the bills that are raised on your hospitalization. It should also cover pre and post hospitalization connected to that particular illness. It's not that illness starts only when you get into the hospital. Prior to hospitalization, there could be a lot of diagnosis, treatments, other things which are put in place before the doctor decides, okay, now we need to hospitalize you. So those kind of prior expenses should be covered. And once one is discharged from hospital, illness typically doesn't end there. You might have follow-up medications, follow-up consultations, follow-up diagnosis to be done. So hence that also should be covered. So typically you should have 60 days prior to the hospitalization and about 180 days post-hospitalization without any limit on the cost on those days. There are many policies which say you are covered for expenses for about 90 days or 180 days post-hospitalization, but then they give a cap on how much can be covered in those days or how much is the eligibility for those days. So there shouldn't be anything that way. It should be a comprehensive cover for all expenses. It should not exclude any kind of expenses. Typically, there are many policies which give you an exclusion for some kind of expenses like consumables, which is like bandages or your protective equipment or syringes or over-the-counter medicines, etc. So those kind of expenses should not be excluded. And it should also not have a co-pay option. When we say co-pay option, it means that there are certain policies which allow you to take a cover for a significant value, but give it to you at a low cost of premium because they build in a co-pay option saying you will pay 10 or 20% of the bill and insurance will only cover the rest. So it typically say if you have a 10 lakh cover, it will say you've got to cover 20% of the bill. So if you come up with a bill of say 2 lakhs, you will have to still pay 43, which defeats the purpose of having a health insurance. It should also have lesser waiting period for certain illnesses. For example, any gynac related illnesses or cataract or specific illnesses like this, there are policies which have a waiting period. So those should not be extended waiting periods. And there are certain policies which exclude certain illnesses and treatments. That should also not be the case. The policy should have a very good no claim bonus reward, which means for every year that you are claim free, there is a certain amount of bonus cover that is added to your policy, and hence you get an increased cover without having to pay additional premium for that. Apart from those feature-rich policies, you can also enhance your cover. You should also have the option of enhancing your cover by adding certain additional rider benefits. So you should be mindful of what kind of riders are offered by your base policy. Typically, this is one of them, where all consumables, like I just mentioned before, which are non-medical expenses, this cover should be there. Else, a fair amount of one-time supplies and non-medical expenses such as bandages and protective gear can add almost 10% of your hospitalization cost. There should also be an automatic unlimited restoration benefit, which means that every time you are hospitalized, you're, you still have the full cover that your policy is offering, which means in a year, if you have a cover of 10 lakhs as your policy base cover, after your first hospitalization, which cost you 2 lakhs, if you go into the hospital another time in the same year, you should still be able to claim up to 10 lakhs. It should not be that it will be 10 minus 2, only 8 lakh as the limit. These coverages that we mentioned of consumables and automatic restoration ensures that every time you go to, each time you are hospitalized or each time you need to make a claim on the policy, you always have the full limit to use. Other things that you need to be mindful in case of health insurance is start early. Why so? When you take a cover early in life, it becomes a more comprehensive cover because you are in better health at a younger age. And therefore, it ensures that you will get the benefit of coverage for all possible conditions because you are at your healthy best and you do not have any existing conditions which can be excluded at any stage. So taking a cover early in life is always the best option. Once you've taken that cover, you are ensuring yourself to be protected against unexpected emergency medical expenses and are therefore making yourself financially secure. It also ensures lifelong coverage, which means in your 20s or in your early 30s, you have taken the cover. And say a few years later, you develop a health condition, you can still be covered for that because when you took the policy, you were not having that illness. So it ensures that any expenses connected to that illness that you have developed will still be covered lifelong because you took the cover and illness happened later. And this taking the cover early in life when you do not have any other illnesses, etc., also ensures that you avoid any kind of waiting period or exclusions. For example, if someone is diabetic and is taking a fresh cover, they will have a waiting period which says your anything connected to diabetes, you will have to wait for 2 years before you can be eligible to take that claim. Now, taking a policy earlier in life when such a condition doesn't exist means that even if you develop it at a later stage, you will be covered right from the beginning. There will be, because your policy is already running for a few years. So a typical example is someone who's a 25-year-old buying insurance will be healthier and will risk contracting illness later in life, but will not be subject to a waiting period. Unlike someone who takes a cover at 45 and develops a health condition within a couple of years, and then that person would have to wait for another couple of years, possibly, till that illness can get covered. Or at 45, you could even be told that, sorry, you already have illnesses history, and hence you are a risk and we will not give you a cover. So these are things that one can avoid by taking the cover early in life. What are some common pitfalls that policyholders face because of which their claims get rejected? We often hear that, I have a health insurance. I used to pay the premium for so many years. And then finally, when I went in for a treatment, my claim got rejected. So let's see why that happens. One of the primary reasons for that is non-disclosure of a pre-existing condition at the time of taking the cover. So failing to disclose this existing health problem at the start will result in the claim being rejected. Because when you are admitted for that illness, the doctor will take your history, and then you will start telling the doctor, look, this is how it was, this is how it was. It has been like this for me from before. Then, if that comes into the details of your treatment, obviously it shows that you were suffering from that from earlier days, and that has not been disclosed at the time of taking the cover. So, the health insurance company is in the right to not uh, process that claim. Policy exclusions. All policies have certain exclusions on conditions or types of treatment, and that is stated in the policy document. And if you attempt to claim something that's not covered under those clauses, then the treatment will not be covered. So your claim will be rejected. Incorrect documentation. While submitting documents for claim, if you do not submit complete and accurate documents, that could also result in a claim getting rejected. So while submitting documents which are with respect to, say, pre-hospitalization or post-hospitalization or during hospitalization expenses that were not covered, all of them, the documentation needs to be complete and accurate. Waiting period. Every policy has a waiting period for certain conditions. Like I mentioned, anything related to a gynecological issue could have a waiting period of, say, 24 months to 36 months. Your cataract has a waiting period. Diabetes, if you already have that while taking the policy, it will have a waiting period. So you need to be mindful of these before putting in a claim to see whether the condition that you are putting the claim for, does it fall under any waiting period, and have you completed that waiting period? Non-adherence to the policy terms and conditions. Some policies would have requirements like taking a second opinion before you get hospitalized, or you getting yourself hospitalized without the existing health status actually requiring a hospitalization. And it could have been treated with OPD consultation and need not necessarily have been a hospitalization. Then under these kind of conditions, there could be a rejection on the claim. For an example, a policyholder with a history of heart disease fails to disclose this during the application process. When a heart attack occurs, the claim could get rejected because this was not disclosed at the start. So what do we do to ensure a smooth claim process and our claim not getting rejected? You must have a full disclosure at the time of taking the policy the first time. Be transparent about all your pre-existing conditions, past health history, current health history, etc. However minor it may be, it is okay to put it out front there so that you have not hidden anything for future reference. Understand your policy terms and conditions. So read through the policy that you're expecting to take. Understand all those terms and conditions. Speak to your uh, advisor or your broker who is suggesting the policy to you. Also, speak to the insurance company itself if you really want more clarity on the conditions and the exclusions. Understand all that before you take the policy. Please maintain your health records, whether it is with respect to any particular treatments which you're going to be claiming with that particular policy, or any medical history that you have. Kindly keep those medical records as much as possible, because when in future they would be requested for, we wouldn't know. Ensure you take regular health checkup. Stay updated on your health and inform your insurer if there's any change out of the way uh, diagnosis that has come up with your regular health check. If your medical policy gives you annual health check facility, please make use of that. Keep yourself updated of your health status. Please pay your premiums on time so that you avoid any kind of lapse. Yes, you are allowed a 1 month grace in case you have missed paying your premium to ensure that your policy continues. But please be mindful that within that grace period, if you were to get hospitalized, your claim will not be processed. So at Happy Investor, we encourage that as a policyholder, you fill in your health insurance questionnaire when we first set up this whole process for you. This ensures that you do not miss out giving any information about your health. So what are the factors that actually affect the premium that I have to pay on a cover? The first thing is the age. The age of a person is connected to the risk on health for the person. So the age is a critical component. So every insurance policy fixes premium based on the age band that you fall into. Medical inflation, healthcare costs are always rising. So healthcare premium is also connected to that rising costs in the market. Your existing health conditions and illnesses can also impact the premium rates. So if you are someone who's taking a cover with the history of some kind of illnesses in the past, your premium could be loaded more than what another healthy person of the same age would be. Example, a 35-year-old individual with a history of diabetes may face a higher premium compared to a healthy 35-year-old. Additionally, if healthcare costs rise due to inflation, insurer may increase premiums to cover these increased expenses. Another aspect of health insurance is the room rent limit. Typically, policies are given for a certain limit of annual cover, say 5 lakhs, 10 lakhs, or 15 lakhs. But apart from that, there are other things also which could be built into the policy, which you need to be mindful of. Sometimes there are room rent caps. Insurers often set this limit on a daily room rent coverage. For example, a policy of 10 lakhs could give you a room rent cap saying that your room rent cannot be cost more than 5,000 per day. In that case, if you take a room that's more than 5,000 per day, it would have implications on other aspects of the claim. What would this impact? So exceeding the room rent cap can reduce the claim payout on the total bill because you've taken a room which is costing more than what your policy is allowing you to use. It also increases the cost of all services availed from that room because the rent was higher. For example, if you are in a room with 5,000 as rent, then the doctor's fees for one visit could be 1,000 rupees. Yes. But if you go into a room which has a rent of, say, 7,000, that doctor's fees could be 1,500. So your policy will not cover the 2,000 extra on your room rent, as well as will not cover the extra on the doctor's fees. So since you've gone into a room of higher rent, every aspect of service that you use over there could be more than what the claim will be settled for. So therefore, you have to cover policies which do not have this cap on the room rent. Else you will end up paying almost 30 to 40% of your bill cash down, even though they will settle your claim as a policyholder. So, what would we recommend as your trusted financial partner? We understand that every individual's needs are unique, and we take time to understand your specific requirements and recommend the best possible plan for you under your personal situation. We have a cumulative experience in our team with the insurance industry, and therefore we can provide you valuable insights and guidance to select the right suitable policy for you. We also believe in an open and honest communication with our clients. So we will keep you informed every step of the way as to what you are eligible for, what can be done, what cannot be done, so that you have the right picture. And we ensure that your satisfaction is our top priority. So therefore, we will provide the service and support that you need in your hour of need. So we're choosing Happy Investor as your health insurance advisor. We will meet your requirements at the highest level. We are committed to helping you find the right coverage and navigate the complexities of the insurance landscape. So how do you choose the right insurer? The best health insurance company for you depends on your specific needs and preferences. So you have to consider factors like coverage, the network hospital, the claim settlement process, customer service that you would get, and then make the decision. So here are some of the reputable health insurance companies in India. We have the experience of working with most of them, and therefore our recommendation. HDFC Ergo Health Insurance. This is known for its wide network of hospital association and the comprehensive coverage options. They ensure that everything is covered. They also give you options of a double cover at the start of your policy, and they do restore your policy cover unlimited times in a year. At every visit, you are covered for the maximum. ICICI Lombard, it offers coverage for some conditions which are not covered by other insurers. So we look into these requirements for those who cannot get cover from, say, HDFC for some particular reason, but that particular condition could be covered by ICICI Lombard. Niva Bupa Health Insurance, they also provide some innovative health solutions. They've built in some features which are new in the industry and do offer some comfort to the insurer. Bajaj Allianz in general insurance, they also offer a wide range of insurance policy covers. So remember to compare multiple options before you choose, because your specific requirement, your budget, and your need of what you're looking for in that health insurance is important. So contact us if you wish to know any more. And these are our numbers. Our office numbers are 98861 98851, or you could reach out to me on 96200 96201, or you could write to us at info@happyinvestor.in. You can also visit our website at www.happyinvestor.in, and we could help you figure out best options for you. We can have a question answer session now. If there are any questions, you are free to share it on the chat box. I have a couple of questions with me here. This is from Deepak KS. He says, along with these details, can you suggest the best insurance which covers all those details which I am explaining? So I just mentioned that these are some of the insurance companies who we have previously worked with and currently work with. After having checked their policies that they offer, products that they offer, this is what we have shortlisted. And for a particular requirement that you have, you can reach out to us and we shall suggest as per your need. There's another question from Purnima Nagabhushan. She says, please suggest a policy which covers all the pension points because many policies have a gestation period of 2-3 years and doesn't cover consumables. So I just mentioned that these are some of the covers that we have been recommending to our clients. Please reach out to us on our numbers that I shared. We shall share them with you again. And based on your specific requirement, we shall be able to suggest options for you. I have some more questions here. BV Sridhar has a question here. He says, what is top-up policy and why is it necessary? Please elaborate. This is a very good question. Let me give you an example. You have a basic policy which covers you for 10 lakhs. You go into hospital. You've been diagnosed with a condition which you've been going through for the last 1 month. So you've run up bills for 30 days. You go into the hospital and there is a certain amount of expenses in the hospital. And post that, there will also be post-hospitalization expenses. Now, if all of this is put together and the cover goes beyond 10 lakhs, your policy will settle only 10 lakhs. They will not settle more than 10. Right? So what do you do for the rest? That is when a top-up policy comes in. And a top-up policy is like, now, for example, you have a 10 lakh base cover and you are suggested to take a top-up cover for 50 lakhs. So now when a top-up cover for 50 lakhs is given to you, it's assumed that your 10 lakh base cover will take care of expenses up to 10 lakhs. If your expenses go above 10 lakhs, then it will be anything that is above 10 lakhs will be settled by your top-up cover. So your top-up cover comes into the picture only after your bill is above 10 lakhs. And the probability that your bill will go above 10 lakhs is not 100%. It's not that every hospitalization that you get into will be 10 lakhs. Therefore, a top-up cover kicks in only after the base cover. And hence, a top-up cover comes at a very low cost compared to your base cover. So for someone who's taken a 10 lakh cover, and has paid, say, 20,000 as an annual cover premium for that 10 lakh cover, an additional cover of, say, 10 lakh, 50 lakhs or 1 crore could come at a very low cost of somewhere, say, 5,000 to 10,000. I'm giving you approx figures just to give you an understanding that a top-up cover comes at a lower cost because it kicks in only when your base cover has been used up. And this is something that we are suggesting to our clients now, keeping in mind the escalated costs of medical coverage, medical expenses that's coming in, so that in case there is any condition where you do land up with a higher bill, you are still covered. There's another question here from Siddhant. He says, how does the Ayushman Bharat Yojana impact the current insurance for elderly? Meaning, should we continue with private insurance for the elderly above 70 years? Now, this has been a recent announcement. We are also looking into the details of this. We need to understand what are the terms and conditions for enrollment. Though it says it will be given to everybody, we need to understand the terms and conditions for enrollment, the process for enrollment, and also what are the terms and conditions of the treatments that will be offered? Where will these treatments be offered? So which kind of hospitals will honor the Ayushman Bharat cover? We are awaiting a little bit more clarity on this. Some amount, yes, we have. The Ayushman Bharat card is necessary, and the treatments will possibly be only in government hospitals and not in private hospitals. There are some more terms and conditions which we are also waiting for clarity from New India Insurance, who are private insurer. Yes, that's possible. You can reach out to us and we will be able to help you. This is called porting your cover from one insurer to another. There are certain terms and conditions that you will have to fulfill. You will have to fill up a health declaration. You will have to share previous policy documents with us, and the request will have to be placed. And then the new insurer will check your application and then process it if they are willing to accept that risk. And then your cover can be ported along with the benefits that you have accrued with your current insurer. So you will not become a person who is taking a new policy. You will move along with the benefits of the existing policy. There's another question from Vinod Prabhudev.
Wait, Sujata, a minute.
He
Mohana had a...
asks, is it worth taking a policy on top of an existing corporate policy? This is also a very important question. We have a lot of clients with us, as well as many other people who are in the corporate sector, do have this thought process saying that my employer covers me for health insurance. So why do I need a personal cover? A, your employer offered health cover is valid only as long as you are an employer with them. Any break in service for any reason, or even in the transition period between one employer to another employer because of change of job, will mean that you are not covered. When illness strikes or when accident strikes, we don't know. So in between, you will not be covered. Even if you continue to be having that covered for a long time, and then at some point in time, your work life will cease. At that time, if you want to take a cover, because medical expenses are lifelong, and medical emergencies can happen, and they can happen more at an advanced age. So typically, if you are having your corporate cover, you mean to say that I will be covered by my employer till my age of 55, 60, etc. And then you would want to take a personal cover. All that I mentioned earlier, saying the advantages of taking it while you're young, apply to this also. So at the age of 60, if you try to go and get a personal cover, chances are that you would have developed some kind of medical history, which you will have to declare. You will have possibly some existing health conditions. So all those will be reasons to either load your premium and make you a person who has a higher risk. So there will be exclusions, there will be waiting periods. And if you have had a chance illness, something that is of a higher risk, there could be a chance that you are not eligible to take a cover at all. Hence, even if you have a corporate cover, it makes complete sense to have a personal cover as soon as you can.
Hello?
Manoj Kumar Naik has a question. He says there are few insurance companies which talk
Sujata,
about 10x or 7x cover. In that case, we do not require you to take up a top-up insurance. Can you please give us some advice on this? I'm not exactly clear on what this 10x or 7x is. Yes, there are a couple of companies which offer you a double cover, which means if you take a cover for 5 lakhs today, from the start, you are covered for twice the amount. So you would be covered for 10 lakhs, but even then a top up would be necessary. If you could specifically share the details with us, Manoj, we will be able to respond on that. There's another question here which says, what is the procedure to migrate from an existing insurance to a new one? I just mentioned that you need to reach out to us, or you need to reach out to your new provider, and you will have to complete the process of a new cover application and provide your previous policy histories, and it can be moved. It might typically, this porting can be done just before the renewal of your existing policy, and it would be advisable to start that process 45 days before the renewal is due, because it does take some time for them to evaluate your application and confirm whether the migration is possible. If it's possible, it goes through. If it's not possible, then you continue with your existing cover. So you should give yourself time to ensure that you have that gap. Okay, there's a question by Mohana here. She asks, if I take health insurance, do I need to take travel insurance to cover international coverage? Health insurance, as we offer, is over here domestic in India. When you travel, you should take a travel insurance, which will cover all aspects of insurance related to your travel. So that could be medical as well as non-medical. And that comes under the cover of category of travel insurance. Because when you travel, it could be loss of passport, it could be loss of your luggage, uh, it could be delay in your travel, as well as medical emergencies. So travel related for overseas, it should be a travel cover. Health insurance will cover you for domestic health insurance in India. I hope that helped, Mohana. Rajesh, if you could reach out to us, then I would be able to help you out with the quoting. Each each insurer will have a set of questions to ask when it comes to porting from existing to new cover. Are there any more questions from anyone else? And we hope we've been able to answer most of your queries. If you have any further queries, you can reach out to us, like I said, on our numbers. We will be happy to help. You can reach us on our office numbers 98861, 98851. You can reach out to me on 96200, 96201, or you can write to us at info@happyinvestor.in. Thank you for being part of our Saturday webinar. And thank our viewers on YouTube as well. And we hope we've been able to give you a lot of information that has been helpful. Hope we've been able to answer your queries. And as promised, we are closing our session now. We had said 10 o'clock to 10:45. And we thank you for your presence. And we hope to see you again with our next session as soon as we announce it. Thank you and have a good day.